Welcome back to this live session, traders. First day of trading week. After this previous weekly NFP, we have started another considerably big trading week. Potentially is coming with some very important news has come out, and so let's see first of all the calendar, and after we look at the calendar we will be looking at the chart to see that potential trading entry on gold as well as in currency pairs, whichever giving better entry opportunity. Now looking at here on in terms of the news today, there isn't any scheduled news. Welcome. And tomorrow big day for CPI, so we'll be trading that one. Today's market could be a good move with the CPI potentially. So here we are looking at currently to see the gold, and along with gold also the British pound, US dollar and euro dollar had an initial breakout from this key order block from this support level. Also we'll be looking at potential entry in this market. So before we look at any trade setup, first step is to look at the multiple entry in this market, and multiple time frame analysis is key. Now as you can see, today's market is an all-time high. So we saw that there was a breakout with market open from this trend line, was a significant breakout, and with this breakout the market had an entirely bounce off that level. Okay, so this is a strong breakout in this market with a gap open that we have seen earlier, and with this gap open, so there is a initial move, welcome, that you can see from here, a complete breakout followed by pullback, and you can see the market is in another impulse to the upside here in that market, so which is significantly bullish price action here in this market. And as this is a bull market, if you look at here, today's price open with a gap, and with this gap open the price didn't look back, which is showing that the market may continue to rise back to the upside here to create a new higher high. So therefore the possibility here that this market to maintain its uptrend is higher. So that's where you can see the price action is bullish. Now if you look at today's price action open with a gap, good day, welcome everybody. Now here is the gap open, and with this gap open the market has made its move back to the upside here, which is pretty significant move. And this move on gold is, if you look at, it's a potentially a predictable move that you can say, because of the the geopolitical tension that you can see. Now at the moment, as the market has created this all-time high, and there is also if you look at the rate cut, there is a news for rate cut in 2026, further cut. So rate cut means that it is bullish for gold, right? Because if you look at the gold a trend in the market, right, it's a bullish trend. So a rate cut more often, you can keep that as a as a understanding of how gold will behave with the rate cut is that any rate cut will bring gold upside. So that's always universal because of this is how the fundamental designed. So therefore, with the news for the rate cut, there is a bullish for gold. And now also you see there is some news around the world that, especially when there is an economic crisis or geopolitical tension, there is always an uncertainty that creates a bullish move on gold. And that bullish market structure, if you look at, you can see that this is where there is an upside bias with this bullish daily. Here is the move that you can see on the daily time frame. So from the monthly, weekly and daily, we can see that gold from the multiple time frame, it is bull market. So going back to the intraday, now here is, we can see that after the previous sessions open, the market is now on a pullback. So this pullback is again significant, where we can see the market is maintaining that series of higher low. So from the 4-hour time frame, that you can see it's maintaining this series of higher low, and with this series of higher low formation on gold, which is eventually could bring the market back below for a pullback. But I wouldn't consider this one is a downtrend. If you look at after the 4-hour candle close, the market is pushing down. It's a strongly bull market. Therefore, breaking below can be an opportunity to go long after price action confirmation. So here I'm going to look at some key levels that you can look at for a breakout, and then to entry for a trade. So this is if you look at, this is an impulse here, upside, pullback, and you can see another move, pullback, and you can see another move, pullback. So the market is maintaining this series of higher high and higher low, which is an uptrending market structure. And with that uptrend, here is a lower time frame. This is a breakout structure. In this whole move, the market, the candle first time closed back below the 20 exponential moving averages that you can see, and therefore here is, we are looking at the market structure to break that low here and potentially to give us an entry. So a couple of levels that you will be looking at now. 1 minute chart for the trend continuation here is this level that you can see. From this, you can see series of higher low, which is an upside, and now after creating this high, it's now breaking below. So the current support is at 4563 level and 4574. Either of these support can be an important level that you can look for potential entry in this market. So therefore, it will be good idea if the market, you wait for the market to drop further down here. So there is a sell alert, but I wouldn't take that, because you want to take only in the major direction of the trend. And this is very important that we always look for a trade in the major direction. So the major direction here is that bullish. If you look at the overall market structure, here is a bull market, and in that bull market there is an order block. So if you look at, this is sometime, when you look at the price action, they will tell you many things. So this kind of pin bar, red pin bar, you can see this kind of price action there normally shows a sign of order block. So you'll see that this kind of price action will give you that there was an order block here. That means the smart money has placed order in that area, because as a retail trader, there is only one way that we can know in a sense that how the smart money placing their order in the market. Okay, because this is how the smart money trading is on the other side, right? Because the market is globalized. No one knows that where the order is coming, where the order is going. So the only information as a retail trader that we have in hand is those candlestick pattern, right? And some indicators. So this is a big realization. You see that regardless of what we can see on the news, okay, so the news can be an effective way to see some of the move, but news usually will give you the overall move. For example, with the geopolitical tension, overall trend in the market is bullish, but we see that there are red candle formation, right? There are order block formation. So this zone is a part of the trending market, and those areas you can understand how the smart money is interacting with the market. These are blueprints of smart money trading. So if you look at here, this is the smart money zone where there is a narrow doji, and with that narrow doji, the market, if you look at here, you can see that with this order block retest, the market could eventually bounce off that level. So therefore, looking at the lower time frame, if we look at the lower time frame here, is what we are looking for, an entry from this key level. So you can see there are quite a few long wick price action here with a pretty long wick rejection. There's another one here, rejection. There's another one here, rejection. So in those areas, in those zone where there is a high area of value, where the market may break below and then could bounce off that level. So now breakup structure is where the best trade comes in play, right? Breakup structure is very important to see, especially when there is a trend in the market. So looking at some of the the previous session that we have opened, the London session trade was also breakup based on the session breakout, and we were waiting for the breakup structure to enter to the trade. And I also have shared the pre-trade analysis. So this is the pre-entry analysis before the London session breakout. So every day before the London session breakout, as well as also during the NY session, also I do share the pre-entry analysis in the Telegram channel. You guys can join also there to access the pre-entry analysis, while also many of the trade, almost every trade that I'm sharing in the premium group. So for joining to access the pre-entry analysis, so probably you also can enter those trade, you can join the free Telegram. The link is given in the chat. Stay connected, where regularly I'm sharing all those analysis, that how our trading plan. So we use I believe that you guys, many of you already in the channel, that you know that the strategy that I use in a specific time. Okay, so probably this can be something new for you, can be, but if you think that it's something new, do you think there is something new that only trading on a specific time period? So usually traders tend to trade based on that candle close or the price action confirmation, but the best trade comes when there is a volume, right? And those volume comes when you understand that when people in fact coming in the market for trading. Okay, that's where it makes a big difference, because when the traders coming in the market, a lot of volume coming in the market moves. Most of the time the trade doesn't work out is because of lack of volume. Okay, so majority of the trader more often are accurate in their directional bias. So another important point, you see that for example, there is a break here, break below, the trend is up, and then with this break below the market has broken up. So this could be an uptrending move, right? It could go up here, but what do you see, the market reverse again because of the lack of buyers input here. The buyers are not placing enough volume here, the market reverse. So because either it will go in one direction or it will go in sideways. So if the buyers not buying, suddenly the order get closed and the market drop down. So that's why during the session, just new buyers, new sellers coming in the market, and the volume comes. So it's to look at 8 a.m. London time, and okay, so these two sessions are crucial. When you combine this session with some tools, such as if you are using this tool, then we will be combining that tool with the session open. That's where you can get a high probability trading entry. So that being said, here we are looking at, this is the now intraday 4-hour time frame after the previous session's bullish candle. This session the market has dropped to that and dropped to that support, getting the rejection back above. And if you look at, this is the 4-hour time frame here, so far from this support is getting the rejection back above. And here now it created 4584 level is an important support. Okay, 4584 level is an important support, and 4584 level is where you want to see the market to have a breakout. Okay, so the way the market structure has formed, some of the levels that I have drawn here is because we want to get into the trade from those levels to the upside. Now previous session we the trade, because what we are opening also simultaneously before we look at entry, also it is good idea is to look for or to analyze the previous trades, okay, that's how we can keep track of how the strategy is working. Right now, previous daily Zoom, if you probably have watched the Zoom session in the premium group, I have also shared the recorded version of the Zoom session in the channel. So we also discussed that how we will be waiting for a breakout structure in the sessions breakout. Now, why it is so important is because the more confluence that you will be adding to your trading, the higher the probability of winning, remaining over the long term profitable. So now we can see the market is trying to break that low. Okay, this break you can see on the 1 minute. It's coming to below this previous crossover candle. Now we might be entering a trade here shortly, because firstly there's a 1 hour candle close coming and there is key support here. This is the intraday support, but it's still not yet. You want to see there is a break below and a rejection. So if you look at this is the 1 minute move, how the market is moving is the most important part, because it's not always the key level. It's not always support and resistance. It's also how the price action is approaching those key levels. The reason is because how the market structure or the price action is forming is a real-time information, because this is a key level of support, and the market can come back to this key level of support in many ways, right? We could see the market is coming back to this key level of support with one big long candle, okay, one option, and the other is that the market can come back to this key level of support with multiple candlestick pattern, or you can see it's one red move coming back below here to this support level, and with that one single move that you can see in this market where the price is approaching that level, okay, here is the break below that you can see this long red candle. So we might be able to find an entry. Now, like this, when you see that directly moving without any pullback, that is a sign of false breakout. Okay, so we might be entering a trade after it crossed this low. Not for a very long period. We might be entering for a short move here, and we will be targeting to this key level here from breaking below. So I would like to see the ATR also here. So here's the ATR, the 1 minute, not much, 14. So we're targeting to the high. So here I'm going to open a buy on gold, and stop loss will be below this low here, and we'll be targeting to this level. Later if we need, we can adjust. We'll keep little higher target and we can readjust anytime whenever it's needed. And later I will be explaining the full strategy. This is potential breakout trade, and so giving the stop loss at 4578.47 and keeping the TP target here at 4599.24. So I open a buy here on gold. So long on gold, and I've shared in the group as well. So expecting an initial bounce back to this key level. You can share your feedback on the live chat if you are running this trade with me. So here it's so this is a support and resistance strategy that I have used, and we want to take an initial breakout here. We might not run very long because of the volatility. So there is a break of support. We had a space here. see how far it goes. So there will be 1 hour candle close coming here in that area. So there is a break of support and okay, so this 1 minute candle closed with a narrow green doji, and so how this 1 minute candle closing also important. If we see that this one is closing as a narrow doji, creating an order block here, the market may eventually could bounce off that level. And if the market bounce off that level, because the market has broken the support 4590.70 can be a level that we can consider either partial or full profit taking if successfully the market bounce off this level from this zone here. So there is 1 more minutes remaining for this candle to close on the 1 hour, and the price below the support level. Breaking above. So the 5 minutes candle also having some rejection back above here in that market. So we are near our entry. I will be ready to close at any time after the market successfully break above. So 1 hour candle close with a pretty long red candle. Now the question is, the market going back up again for another retest or breaking below here? So the way the price action has formed from the lower time frame here on the 1 hour, it's that we can see there is a rejection here. So I'd like to see that successfully the market had break above. So far here, if you look at this is looking like a short-term false breakout. So there is where I'm expecting at least to go up to nearly to 50-55 pip. If the market move back to that 55 pip, so we want to take this move. ready for a move here. So even with 40 pip, I will be happy to take, because we don't expect a big move in that area. This is a bearish fair value gap, and breaking above to that fair value gap is where we can look for the taking out of some of the profit. So I'm running in. Pushing back to the upside here. Awesome. Good to see that it's breaking to the fair value gap, and we are 16 pip up on that. You want to keep that high win rate, so you will be, if there is a very stronger rejection, and there is a rejection from the high. Let's see that. I think still there is a possibility for moving up. Focus is very important, especially when you are managing the trade. There is always a chance for managing the trade or changing your criteria, because the market is very dynamic. The market will never move always as you expected, so along the way need to manage the trade accordingly. Either closing or adding position, or the money comes from the trade management, guys. Keep in mind that. So learning trade management is very important, because you might have a strategy that has an edge, that works well, but if you are not managing the trade accordingly, according to the market sentiment, according to the market structure, according to the volume in the market, it's sometimes might get very difficult for you to remain profitable with that strategy. So this is the 5 minutes price action. This is a narrower doji. This one has closed, so now we might see here an upside bias that we're expecting to go ahead and cross this high. So here, you want to see that the market is going back here to retest this resistance line, and that's where you will be taking out of the trade with potential at least 30 to 40 pip move will be good, but here getting some rejection. So with this 1 hour closed, the next key level that you want to for the market to break is 4586 and going above. So here on the support level, you would like to see that the market to go ahead and retest that high. Some bearish pressure coming, looks like that. So in this area, let's wait to see the 30 minutes. We might come back for a retest of this 20 EMA. There is a doji here, and sudden volume has come. If you look at the lower time frame here, okay, getting, so it deepened well below here. In our previous trade as well, the market has deepened well below. Have very tight stop loss, and the market tested this support. Would like to see it's crossing back above our entry. Nearing to our entry, and once the market goes back to the profit area here, crossing above 4586, we'll be seeking the trade. Just got into the profit area, and as soon as the market crossed 4586 or above, you know, you could close at break even, but I want to take on profit. There's some drawdown is always this is where you can see the market now reach at entry. So one more rejection back to the upside here is what you want to see the market to go, and All right, so form a very narrow doji here. So if you look at the 15 minutes market structure, it has created a very long wick candlestick pattern here in that area, and we could go break even, but I haven't gone break even. I usually try not to close break even after a move. We might see that deeper pullback in this market, but before the pullback, what we could see, okay, so there is a rejection here on the lower time frame, and that rejection might take that market back above here. So we will be ready to take the trade closing on profit shortly after reaching at least decent number of pip move upside. It's interesting. There's a double bottom. Breaking below here, and so the price on this support area where there are some long weekend is being created. So from this support level, we can, let's wait to see what kind of market structure is building. It may come down for here a deeper pullback. If it changes the trend, then could see some of the imbalance in that direction to be filled. Okay, getting some hello coach from Zambia. Welcome back to this live session. There is some downward pressure that you can see in the market, so that might bring the price back below. And in 40 minutes there will be NY session opening. You'll see that what if this trade break below, we'll be waiting for the NY session opening. If it goes up, we'll be closing at entry or above this level with I do not want to close at break even, because you want to take either with the running profit or either go to the stop loss. So the market is approaching the 10 EMA for the 1 hour time frame, and this is the last point that we can expect the market to react to back to the entry or above. And 15 minutes price action, if we look at, there is a significant move from the 5 minutes. We see there is a 5 minutes candle closing, and so this 5 minutes candle closing is crucial to see where it is closing at. Pressure is downside. Alright, so patience is key here. This is where the big difference between a successful trader is the patience. Breaking out. Because we see some improvement. Welcome traders with this live session. This is the first day of the trading week. Hello everyone. And this week, gold gonna be, we see there is a very stronger move on gold, and that's because of the geopolitical tension that we saw. That there was, as soon as the market opened, which country are you in? Belong, bro? I'm in Melbourne, Australia. Which country you are in? Share your also trading experience. How long you are a beginner or an advanced trader. Okay, so here is struggling in that area. You're going to see which direction I'll move. The bears are stronger here, so there might be break of support. So get ready to get this one probably to hit in the downside. Thank you, welcome. It's interesting. Got rejection nearly from the support level, and I'm still on the trade. This current candle is important. There's a rejection from this lower price, and with this rejection here, okay, so with a rejection bouncing off the level last moment, we want to see the market to go ahead and break that resistance line. So with a bigger bull candle here, okay, now it is possible for the market to have a reaction back above. If we look at the 30 minutes candle close coming, and so the 15 minutes candle close coming with that. So if this candle closing as a narrow doji or bull, expecting it to bounce off that level. So some bullish bias that you can see here in this market. So getting the rejection here. So with that rejection, very interesting. This is where the market is. Creating multiple rejection. That's interesting. This might form an inverted head and shoulder. I think there might be. If it form this inverted head and shoulder, then there is a potential for the market to go ahead at 4590, which is this order block here when the market dropped to that. and if that happens, then we might see the market to bounce off this level to this level where there is a order block. I hope you guys are enjoying the live session. Make sure you give a thumbs up and also subscribe to the channel if you haven't done yet. Which pair you trade? Welcome. Hello sir. So I trade XAUUSD, Euro dollar, British pound US dollar, dollar yen. What pairs you trade? These are the most liquid pair, isn't it? You can share what's your favorite pair that you trade. So sir, what will be the entry level for buy? We are on a buy and we entered little higher. It's in the midway. Okay, so trader 1-2 XAUUSD. What instrument that you trade? You can share here. Anyone trade other than XAUUSD or anything else? Nasdaq, US 30, BTC USD. Anyone trade here Bitcoin? You can share. Gold US 30. Okay. Other than gold, what else you trade? So there is a doji on the 15 minutes and also 30 minutes candle close coming with a, if you look at here is a doji. Looking for a potential bullish bias. Next session I'm thinking sell. Okay, you're thinking sell on next session. We still have 30 minutes to go, and let's see if the market breaks out from here. We might be looking to see going upside again. Simply and gold. Gold US 30, gold. Anything else? Anyone? So what is the difference between trading gold and trading other currency or instrument? Can anyone find any difference or anything that you can share? Do you trade BTC USD along with gold? Trading gold only, gold give fast moving pair. Okay. So that's why I trade only gold. Okay. Anyone here trade minor currency pairs? Minor currencies such as NZD, CHF or Euro GBP. I'm also trade the BTC, but only special moment. Okay, cool. Okay, there is a candle close on the 30 minutes. So this is 30 minutes close. Let's see that kind of price action it has formed. And 15 minutes large pin bar. So with the price action here, there is a potential for an upside bias. Gold sir, I am also trading BTC, but okay. There are two things. One is if you trade one currency or gold, metal, WTI or BTC or anything, there is one advantage and one disadvantage. One advantage is that if you trade one only, then you have known everything about it, right? What is the key level, what news this market moves, what kind of, because most of the instrument behave in a similar way but little differently. So there is a little bit of different happens instrument to instrument in terms of volatility, right? So some instrument react to news differently, some instrument depending on what kind of news it is. That's the big difference, especially if you are trading on the lower time frame. Then trading too many instruments is really difficult, right? What is your trading strategy? Okay, so we trade breakout. Okay, smart money strategy based on the SMC. We trade breakout in London and NY session. So we use tools to help us to sort out some of the trades. So especially in session, during the session, London session or NY session, when there is a break of structure, that's where we trade, and that gives really good outcome for us. I traded many strategies, but this is what really helped to grow as a trader, which is proven. And I'm trading in 2026. You guys see the stats. This is the real stats from the journal. Okay, so we just have got up nearly crossing the entry. Now this move can go up further, so I'm holding on to that. So this trade, you see that just before the stop loss it came back out. So always be hopeful for your trade, don't close earlier. This is a good idea to manage the risk. Now this is the recent high here. Okay, because the market has got reaction, there is a possibility for further upside here. I'm still holding on to that. The market has reached at entry, so from here expecting it to break to the upside above 458,690 level. Crossing that high, there is a significant amount of fair value gap. So this is a FVG, and we want to see that the market has filled that FVG, and if the price managed to break above, there is a potential for a faster move back to the upside here. So crossing this high, it will reach to 16 to 17 pip in my entry. It can be a little different in your entry depending on when you have entered. Now we have entered in the profit area. So anyone here still holding on to the trade? You can say yes in the live chat if you are. Just want to see that how many of you are following this trade. Thank you. Bro, what is your time to trade live? Okay, so the time that I trade, so it's on NY session. So I have come on live now. It's 1 hour, 1.5 hour. Okay, so it crossed that high. Now this is where the point that we want to see that it's getting back above. Okay, so there is a buying pressure. You can see long wick candles being formed so far. So I'm still expecting it to bounce off that level. Thank you. I entered lower after close of the first 5 minutes bullish candle. Okay, so there is a bounce here. We are on profit, guys, and now you want to see that it's getting up to the fair value gap. You want to see that it's breaking up to the fair value gap. And so here sellers trying to push that market back below. Didn't approach the FBG yet, so breaking as soon as the market will be able to break the fair value gap, reach that, we might see faster move back above here to 4590. Okay, so far we can see that bullish bias. So it's getting kind of consolidation here. It's interesting to see it's forming long week candles. So long week candles means that is still the possibility for an upside bias. Series of higher low, and okay, approaching that fair value gap, and I'm really hopeful to see the market to break that fair value gap, going to that area where there is imbalance. So the market usually moves from imbalance to the imbalance. So what does that mean is when you see that there is an imbalance and the price is approaching to that imbalance with a higher ATR, okay, the possibility that the market will penetrate that imbalance. So because that's how the price moves, the buyers and sellers look for those imbalance and wait for the market to reach those areas. And it's getting that reaction back to the upside. It's in a very narrow area. Okay, getting quite a few long week candlestick pattern here. Okay, now this is 15 minutes price action, and upon candle close of this 15 minutes, would like to see the market to potentially go back to 4590. Still buying pressure. Okay, now this time we could see that breakout. So this is what you have seen. This is a bearish fair value gap. Usually when the market approach with this kind of multiple liquidity gap, approaching this bearish fair value gap, usually the market to fill that zone here. And how you can see, if you look at the previous candlestick pattern that you can see from here, okay, all those candlestick pattern that you can see had a multiple rejection here. So because it has a multiple rejection, the possibility for the market to cross that high and then continue to rise is higher. So getting back up here, and we see the price reach that fair value gap, guys, and I'm still holding on to that. Anytime if I'm closing, I'll just say here, I'll give a shout out. Okay. Breaking out. Now we are in profit, but still small. We want to take a bit higher, and there is a potential for a breakout here to go to the fair value gap, and expectation here to break to the upside. Okay. We are holding on to this trade for bigger profit target. This is an important level of resistance, and that's why the market is struggling to break that resistance. But once it goes up, candle close above, we might see that the rest go faster. Okay, so patience is key, as I mentioned earlier. That's our big difference between a successful trader and non-successful trader. Okay, so patience is key. It's also easier said than to done, right? Because it really happens with emotion. Emotion is a big player in trading. So that's why experience is the best time to be patient, because over time ultimately it's gonna get okay. So it bounce off that level now. Right, I want to close second for today winner. Selling pressure coming. Okay, bullish pressure coming. Okay, that's where we are looking at. As I mentioned, once it will reach that fair value gap, it's gonna bounce off that. That's cool to see that. So with this next candle, if it goes up aggressively here, we will be taking that full move, so it will be nearly to 50 pip. I'd like to see that moving back up. So retesting now. Okay, candle close, now retest, forming long wick. That means bullish pressure is still on. So long wick candles means that there is still buyers here in that area. And I'm still holding, but in case, I'm letting you know that in case the market aggressively break below, will be going out at entry. So you don't want to let this market go back further below, but I think we don't have to do that far. It's gonna potentially bounce off that level. With going back up here, we are on the trade. Okay, cool. Now it moved 31 pip, 33 pip. Okay, so I am going to exit this trade now with the running profit here. Thank you. I've also instructed in the premium group, taken that one with 36, 35, 36 depending on at your entry. In my zone here we are up with 35 pip. Hope you guys enjoyed. Still have more to take. Now we will be also going through the strategy education behind the trade. If you close the trade, say yes in the live chat. I think the screen is black. Okay, cool. It's still moving in that direction, and I believe you guys also have secured that trade. So updating the journal, not this one here. So journal for 2026, here is another trade. So earlier we had one on London session, which was 30 pip, 35 pip. This is NY breakout strategy. All right, so let's see that what is next. It's still moving, as I mentioned earlier. This is on a fair value gap. It plus 35, 560. Okay, now what is next? Let's see what's coming in the market. By the way, if you have enjoyed the trade, can you send a feedback in the live chat? So when you're looking gold ahead today, bearish or bullish? Holding. I'm out. All right, so now if we look at the next move in this market to see that where the price action is heading, we'll be looking at the potential entry opportunity. Okay. Have you been on this trade? Loving the trade, thank you, welcome. Okay, so now first day of trading week, we see that there is a significant bullish move in the market. Patiently profitable trade today, thank you. Not only, and I would say that not only today, you know, anytime if you want to win a trade, you have to be patient. There's no other alternative way, and patience pays off, in fact, isn't it? Because any job that we do, you need to be patient, right? So therefore there's nothing alternative than being patient. Okay, now with this inverted head and shoulder, there is a breakout. With a breakout, so far we can see the market is trending from this support level. Now the way this market is heading at the moment, the potential for the market to go back crossing that high is high. So because there is a potential for further upside, any pullback below can be another trading opportunity. Now it biased again back to the upside. So therefore, to enter another bullish entry here, we want to look for the price action confirmation in that area. So it got back to the upside that you can see here in that area, and so it's maintaining that uptrending market structure, and we might see the price to continue to rise back above here in that market. Going back to the, if you look at the 4 hours, so we are going to the higher time frame here now, and with the higher time frame movement, you see back to back 1, 2, 3, 4 hours rejection of this support level here on gold. And because back to back 4 hour of that rejection of this order block, and in the beginning of this live session, if you remember, for those who were here probably have heard of that, there's this narrow pin bar that we discuss is an order block. Okay, so not usually order block form in that way. So if you look at this, is an order block here, and with this narrow pin bar, because it's an order block, the market has broken back below to that order block. The price tested that order block. Now there is a potential for the market to go and create a new higher high. It's very high. So there is a very high chance for the market to again go ahead and potentially to create a new higher high. So in that direction here now, but there is another very interesting thing can happen. Let me tell you guys, here is from experience, is that this is the 4 hour resistance here, and with this 4 hour resistance, the market tested this support here, right? So let's delete all the lines to clarify what it is. If you look at here, you can see from here all those green candles, and in the first 2 hours the market has made its move back below and then gone back up. This market, if it doesn't go straight away back to the upside, that means if the market is not being able to break this high here, chances that it's gonna come back again to break the low. Now this break below to test the low can be very fast. That means it can be just a straight drop and bouncing off the level, or it may not come. So therefore our next plan, until this 4 hour candle close, if it remains like that, until it goes up and create a new higher high, if this 4 hour is going like that and creating a new higher high, then we might see that continuation back to the upside. But if it doesn't go up, create a new higher high, that means it's not creating any green body here, then we will be waiting for another retest of this support for another bullish entry. So that's the plan. There's a saying that This is what it is. The trade your plan your trade. Okay, that's make big difference. Trade your plan your trade. Thank you. Now, there's no solid plan also in trading. You'll see that there will be a plan and the market will not do as you expected. So always have a backup plan, which is the risk management plan. And risk management can be many ways. So it doesn't have to be that. Sometimes putting a stop loss too close can be anti-risk management. Okay, so the market has managed to break to the upside. So it managed to entirely broken back to the upside here. After this double bottom, just before we didn't hit the stop loss, the market had a breakout. So showing up to be significantly bullish here. Now it has created a green body. So that means the market to eventually remain to the upside so far. Now because it has reached that new key level. We're looking at now pullback, significant big move back to the upside here, waiting for a pullback here, and that is where we will be looking at further entry opportunity in this market. So there is a significant breakout here. It entirely broken back to the upside. So it's an entirely a complete bullish move back to the upside from this support level, and looking at further entry in this market. Because it has created this significantly bullish market structure, we want to see the price to break out from that level and then to create a new higher high. So with this complete bounce back to the upside here in this market with a one clean move, the market has created this move back to the upside, expecting that pullback and then to continue to rise here back to the upside to create a new higher high in this market. So with this here, the structure that you can see, it's a full breakout. It's still maintaining a very strong uptrend here, and with this bigger uptrend, like to create that pullback. So this See the 5 minutes. Also there is a clean crossover here, and the market is maintaining this uptrending market structure, this crossover, and we may see the price to continue to rise here. So because there is a sharp bullish price action, we would like to see a pullback for further entry in this market. Now 1 minute market structure that you can see on gold is currently bullish, and breaking out of that structure is what we want to enter again in the trade. So here's a 15 minutes strong bullish engulfer formation here in that area, and with this 15 minutes bullish engulfer, the market may potentially continue to rise back above here to create a new higher high. So breakout structure from this trend can be an opportunity for us to look for buy here in that market. And in the meantime, guys, share some reflection here. What's your trading experience? How long you're trading, and what time you are trading, like what instrument you trade and what session you trade. What strategy do you use? SMC, session breakout, or any other strategy? With this bullish engulfer, there is a stronger bullish engulfer, which is complete full body candle close. I use 920, What so you do you mean by 920? Okay, so 9, I got it. So you mean 9 EMA and 20 EMA. That means 10 EMA and 20 EMA crossover. Yeah, pretty good. Okay, it's a very good strategy if you remain in discipline and you use with confluence. And if you are using that strategy, make sure that you use volume. Okay, now in a high volume session, which is very important to look at. And if you apply that strategy in early, during the low volume session, yeah, then you end up getting a lot of trade that's not that you want to do. But if you are using even on the 1 minute or even in the 5 minutes, 5 minutes and 1 minute are pretty fast timing. Even with the 1 minute during the NY and London session, that's a significantly powerful strategy, of course. Make sure you do the back testing, and along with the risk management. Risk management is paramount. What start for low volume do you recommend? Okay, so the best time to trade as per the strategy also you are trading every day is before session open, like 15 to 30 minutes prior to 15 to 30 minutes later. So all those trade you guys have seen that I have shared also in the premium group, and with the journal I have already, let me bring that up here. So this journal, this is on 2026, all of this trade. Now this one London session breakout, this one London session breakout, this one London session breakout, this two NY session, this is London session, NY session, NY session. So in fact, that because during the session breakout, either the last trade has not been recorded here because this one I sent earlier, so we have one more added here. Now with the session breakout, there is a volume. Okay. If you look at that, there is a trend in the market always, more often, but that trend will continue, such as this one. If you look at, you see that our stop loss here, just 2 pip, 3 pip away from our stop loss, the market had a complete breakout, right, to the upside. And if you look at the trend here that you can see, right, so the trend is very stronger here that you can see, which is completely breaking back to the upside. Now when it was in a downtrend, it didn't move much, right, because it's against the major direction of the trend. Now this move that you can see, it made a massive breakout here. So that one is in the direction of the trend. And because they are in the direction of the trend, we might see the market to continue to rise here back to the upside to create a new higher high. So in a high volume session, picking up the trend, taking the trade in the direction of the trend, holding on to that for as much as you can. There are two ways you can approach the market. One is high win rate, the other one is a high risk reward. Both strategy works. Okay, there's no single strategy that always works all the time, right? Every strategy that you can find, every strategy means that, you know, as long as it has an edge, it works. It doesn't have to be that, you know, what I am trading, you're trading the same. Instead, if a strategy is traded by too many people, it becomes less effective. So try to find always, you know, your edge in the market. That's the best goal. Okay, you can find an edge in the market in many ways. So what is an edge in the market? So imagine that if you flip a coin, you look at, even in the computer, if you flip a coin more than, you know, 100 times or nearly 2,000 times, it's gonna end up being 50%, nearly to 50%. It might be 48, 52%. Okay, now that's a significant understanding that if you flip a coin, it's gonna be nearly to 50%. Now add an edge to that. So an edge can be many ways. So a trending edge can be an edge. Okay, so a trend is an edge. Liquidity gap is an edge. Price action is an edge. So you can add as many edge as possible. So that will give you an additional confluence to take the trade. So that's all you need. So all strategy works. Now, to perform in a strategy, if it is a high win rate strategy, there are two kinds of strategy you can use. One is a high win rate, the other one is a high risk reward. Now, I have seen in my own experience, it could be different for you. As I mentioned, nothing is universal in trading. Everyone's strategy system is completely valid. Okay, so what I have seen, sometime high risk reward strategy requires experience to trade, because with the high risk reward, right, you have to accept losing trades. That requires comes with experience. But with the high win rate, if you have an edge for the high win rate, it's a little more effective, especially if you are a beginner or an intermediate trader. Because as long as you understand that, you know, with a high risk reward, even if you have a trade didn't work out, but you know that it's gonna work and you can hold on to that, that's where it will work. Otherwise, with a high win rate, you have more win. So because you have more wins, so you have more faith on that strategy. Very simple, right? So to get an edge with a high win rate, also the volume session we are using every day for trading with the session breakout. That's where the edge become higher. Okay, because with the session breakout, there are more people coming in the market, there are more volume, easy to trade. All right, so now okay, so let's see that now it's in a pullback on the intraday 4-hour chart, the market from here. So far since Asian session open, 1 2 3 4 candles. So this one closing in 1.5 hours is going to be 4th candle. So far it has shown significant bullish move. We have taken our first trade here as a bullish trade. Now it's a support level, expecting it to come back here to this support level and then to return again back to the upside here. So with a series of higher low, this is a structure that you can see the market with this structure broken out of that structure. Now, I'm looking at the 1 hour price action for the market to come back for a retest. Now this level that we have drawn 4595 is the resistance level. Turning support here can be a zone that you can look for entry on the lower time frame, but you'll see that how far it drops. Usually after this kind of move, it requires a deeper pullback. Some people use Fibonacci. I normally use less because sometimes just to see such a big move, otherwise if you look at where so 50% is here. This is where there is a 20 EMA. Now using Fibonacci can give an additional confluence, but I never trade only based on Fibonacci. Okay, because in trading, every trader has a different kind of edge. Some trader uses RSI, overbought, oversold. Some trader uses Bollinger Band. Some trader uses moving averages, crossover. Some trader uses support and resistance. The more people uses a specific kind of system, the more volume comes in that system. So that's why it comes down to, that's why there is a term called a smart money. And this weekend, keep eye on first day of weekend, that means on Saturday, I'll be creating a separate lesson on smart money system. Okay, so how does the smart money take the trade where the market had a stronger breakout? How you can identify that? So for those who can press the notification bell, you can keep eye during the London session time. We'll be posting on the channel for learning purpose. So the best system is to trade like a smart money, because if you do a research, then you'll see that the total volume, okay, the retail trader volume is much more less than the smart money volume. So the market is moved by the smart money. Now then, to be profitable long term, that you need to trade with the smart money. And that's why how they trade is essential as a trader to know when in fact they are coming in the market. So as I mentioned, if you looked at in the beginning of this session, in fact in the chart, if you look at, there's nothing except if you place indicator is lagging. Okay, the real-time information that you can find is only the candlestick. So green and red candle, that you can see two of them. So this is the only, what I would say, the reliable and visible information to know that what is happening, what the smart money is doing. Other than this, all other information is second hand. This is the first hand information, because the candle that you can see, it's exactly the representation of the orders flow on the other side. But the other information that you can see, such as you can see the news, okay, but it's still secondhand. It's not a full picture that you can directly implement in some of the things. Either they will talk about the future that might happen or might not happen, or they will talk about the past that already has happened. There's nothing you can do. But at that moment, with the certain level, what the traders are doing is only you can know from the price action. And that's why understanding candlestick pattern is very important, and how, what kind of candlestick pattern telling what information is important. So that's why I emphasize on that, and you guys can check out this weekend for the additional lesson as well. Now, another important aspect is the timing. Okay, so with the smart money, if you look at the timing, that means volume and the timing. These two, once you combine, you're gonna get a very high probability trade in the market. So I'm deleting all those lines then levels because there is a significant change in the market structure. Here you can see the price had a breakout and it's showing that bullish. We could see the market to continue to rise here. After this drop here, it has broken back to the upside. Elliott wave. No strategy in a single wave works all the time. If you look at, I can show you plenty of examples where the Elliott wave is not working. So simple strategy is the best one. Okay, now here is what time frame. Every instrument behave very differently in different pairs. Any strategy that follows trend is the best strategy. Always keep in mind trend following strategy, because when the market reverse, reverse, that's where the market create that one, that move. Okay, so if you look at, especially when the market started to trend, so if you look at this move, you can see that the trend follows. Market is such a thing that it never always follow, it's very random. You can consider market is like a tree, right? So if you plant a seed on this ground, it's gonna grow a tree. Okay, now that tree will never be the same as its parent tree, right? So let's say you got a seed from a tree and then you plant a new tree, it will never be the same. Market like that, it will never be the same always. There will be some variation, but the pattern, and that's why you have a gap for the stop loss, right? So that you can fluctuate for the error. And that's why it is important that the probability, using the probability is very important. In trading, if you're a serious trader, then the first thing is to understand the probability. Probability is sometimes, most traders overlook. But once you understand the probability, you're gonna understand how exactly the trading works. Okay, everything is, the probability is very different than what we in a regular sense we think something like probabilistic. Probability is percentage of something to happen, right? That's probability. Now, our brain is mostly designed to think on certainty, so this way or that way, like that. That's why it is sometimes so difficult to understand the probability. Okay, so now looking at here on the intraday perspective from this support level, there is a breakout, still showing that upside here, expecting the market to, okay, so breaking the recent support is important to look at. So we're looking at should talk together, master. Yeah, we can come on in our next session. How many of you want to come on Zoom? We can probably have a Zoom on this live to have some group discussion. How many of you will be interested on that? You can write on the live chat. Then in our next live session, if you guys are interested, we can post a Zoom link on the channel, and we can come on together for the Q&A, have some discussion. That's how we can understand more about the market structure. So say yes in the live chat if you will be interested to come on live on Zoom. That's why we can have more in-depth understanding of the entries, Okay. Okay, here is the market after the break of structure is getting back to the upside here. Still not looking to enter is because you want to see the market to break that low, eventually come down for a significant pullback before we look at that entry. This is the hardest part, in fact, in trading, is waiting for the right entry. It's the hardest part, it's not anything else. Because when you wait for an entry, the human beings are mostly driven by emotion. So every one of that. So most of the time the decision is clouded by the judgment of the emotion, and that's where difficult to enter in the right trade in the right time. But it's not that hard once you become an experience. So this is where sticking to the trading is the key. Once you become experienced, you trade on demo or trade on live or trade on a small account. Just let the time pass by so that your brain get adjusted to that experience, and then it becomes easy. So it's getting quite a few long wick rejection here in that area. Okay, this is the current trend line here. The market is respecting. Ask a question. There is a link for the journal. So all the trade that I'm opening, also I'm sharing in the group with journal. So this is on 2026. We had another one just now in the previous session. So in the last 10 days I had 2 losing trade. 1 2 3 4 5 6 7 8 9. 1 2 3 4 5 6 7 8 9 10 11 12 13. Then it's 14. So in out of 14 trade in this last 10 days, I had 2 losing trade, 14 winning trades with the session breakout. Okay. Now in this support level here, the market structure is maintaining that upside movement. Okay, so with this trend line here, the market is potentially to break that support, expecting it to come back down here, break the support, and then return again back to the upside. What time is this? I think it's now the new volume might come in the market. Now to re-enter for another one. So there is a, if you look at, this is a complete breakout. First entry will be after a pullback now in this market. Happy New Year, everyone. Good morning. Okay, so with this 1 hour candlestick pattern that you can see, it's a, we see this is a breakout of this level. It's a full a complete move back to the upside with a one single rejection. Now the candle is closing above this level. If you look at, it's breaking above this, and what we could see here, that this market to come down for a pullback before we look at that entry. Speak some entertainment. Feel like laughing on that. Trading is it requires really long experience, isn't it? You will be able to, like, if you trade very seriously, sometimes you will see that you might get, like, you know, stressed out with trading. So it has to be very light job, then you can sustain for a long time as a trader. So with this move, we can see the market had a significant breakout, pullback. The trend line is set on the 1 minute now at this level. Now with this trend line, the market may break that low, and that's where we can look for further entry opportunity here in that market. Breaking the key level is where you'll see the price will bring significant liquidity for another potential move back again to the upside. So first day of trading week. Now first day and last day are significant because most of the volume comes on the first day, and also on Friday. Last session is important. These are the areas that you can look for potential entry. Slowly the market is building its momentum. Tomorrow also a pretty strong day coming in terms of, is there any news tomorrow? No, after tomorrow it's coming up CPI. So tomorrow is only GBP. See that Barry will speak, and then after tomorrow, I think it's tomorrow, come on, it's in my zone, it's 12:30 AM. Tomorrow is CPI. Okay, so CPI, it's gonna be this week's two important news events are CPI and PPI. So we'll be covering this live session. And this news will come, you see that NY session will open, and then in 30 minutes time there is a news. So before that news, with the opening of NY session, that's where the volume, that's where the best trade comes in play. And when we combine the breakout, the trend along with the session, best trade comes in play, guys. This is where the secret of winning, this is what we talk about, that high win rate, is because we have been able to achieve this win rate. These are real trade, that all of them you can go back to the premium group and you can check all of that. So exactly, these are the trade was sent out. There's one trade just now we have open and close. We haven't recorded that. This is recorded, but this is a screenshot. Now those trade that you can maintain high rate when you use the high volume session, and we will be using also during the before the CPI. So you can stay present tomorrow as well. I would highly encourage you to stay, so that you can see how the volume will be trading with that session. And also every day, every trade that I'm opening during the London session breakout. So again, bringing that one here. So those trade that you can see the strategy used on London session breakout, also I shared in the group. Pre-London session analysis also shared in the premium channel as well as in the free Telegram. So if you join the free Telegram, you can also keep eye for the pre-London session as well as NY session analysis, where you can I'm sharing the link here, where you can stay up to date to see that what is the plan that we are looking at. That also will be helpful if you are trading yourself or if you're learning as a trader. It takes little time to learn trading, but if you stick to it, definitely it's gonna come. Now we had one trade in this live session. Almost every day we had one or two trades during the live session. I believe that you guys enjoyed this live session. Sometimes trading little boring, but if you get used to it, it's rewarding. So I would highly encourage that. Take it every day, keep learning. There is a lot discuss here about trading psychology, technical. There are many things about order block, fair value gap, liquidity we discuss in this live session, so don't miss out. And also every weekend there will be regular lesson from beginner to the advanced will be posted in the channel. So stay connected by subscribing to the channel. And that being said, I'm almost end of this live session. Tomorrow will be same time, so it's now 1 a.m. in my zone, so it's 10 p.m. every day. I'm coming on live to trade the market, so don't miss out this live session. There you will be trading with me in the live, and also discussion and analysis. Also very soon we will also bring any enthusiastic member directly on live on Zoom to have discussion about the market. We'll see you there as well. Thank you. And let's have a little bit of music before we go. And here is tomorrow's CPI. Thank you very much. You too.